Investing in real estate means one thing above all else: keeping up with the trends currently affecting the market. Boom or bust, high or low, investment requires not only a finger on the pulse of what's happening locally, but nationally as well. While 2020 in real estate starting out on a promising note, the effects of the COVID-19 pandemic short-circuited that optimism, at least for a short while, before the market eventually rebounded and exploded. Although we cannot predict the kind of world-changing events like we've experienced over the last year and a half, we can see trends taking shape you're going to want to be aware of. Here are 9 real estate marketing trends you should keep an eye on going into 2022. The first trend to understand is that renters are leaving the urban areas. Once thought of as hotspots, renters are cooling on urban areas and centers, meaning that the spacious suburbs are far more appealing. Market watchers point to the availability of space and the increasing number of people working at home as drivers of this current trend. New home construction is on a downward trend. While this may not seem right considering the amount of new construction we see in our everyday lives, due to the increase in material costs, many builders are pulling up the reins on large projects. The economy is on the rebound, despite news that millions of people remain unemployed. This is because of the enormous amounts of money the government is pumping into the economy. Between checks and cash payments in lieu of credit, renters have been able to keep afloat despite the uncertainty. Speaking of the economy, interest rates currently remain low, hovering around just about 0%, a definite boom to the market. This trend seems to be here to stay, at least for the foreseeable future, making real estate a generally strong investment. On the flip side of that, housing remains, to many potential buyers, unaffordable. This is because incomes, for the most part, have stagnated nationwide, while home prices have increased. Those two factors alone are driving an increasingly noticeable wedge between buyers and their goals. Home prices are growing faster than wages. The decline in housing inventory we've noted previously is shortening. A basic supply and demand fact of real estate investment tells us that less housing leads to higher prices. With that shortage ongoing, the time to invest in real estate appears better than ever. When people are buying homes, on average, they're buying smaller. Although we can't really pinpoint what's behind this trend, the result for investors is clear. More larger homes are becoming available, opening up opportunities to invest in more profitable family homes. The average number of days on the market is increasing by a considerable margin. The average home sits on the market for 38 days this year, as opposed to around 20 last year at this time. That's nearly double, which gives investors unprecedented room to negotiate. The last trend we're tracking involves short-term vacation rentals. The demand here is exploding. Many vacation home investors have noted a 50% increase in occupancy, with some reporting nearly double the occupancy over 2019. Wherever you are in your real estate investment journey, get in touch with me today. Opportunities exist in every sector of the market. Don't let a moment pass you by.